Good morning and welcome to Beyond the SEAF. I am Jack Kosar and this is effective for March 11th, 2024. Let's get started. Our SEAF signals for this week are industrials, technology, and healthcare. A couple of unique things for this week. Healthcare is technically in a neutral ranking, ever bit so slightly. Um, we included it as a SEAF signal as to the rules of SEAF and how we backtested our model. And backtesting was resulting in the top three always being the SEAF signals, giving us the ability to uh, take part in trends really where the strength is. And due to the nature of the way the flows have been moving around, the strength is still in the top three. So with that being said, the other unique thing is on our trading week, we have our one, two, three, and four right in a row, and seeing five, six down at utilities and consumer staples. Weakness is sitting in that consumer discretionary after having some strength going in the tactical month in the strategic quarter, and similar thing in financials, kind of seeing that reverse momentum going from strategic 2 to a trading week 10. Overall, though, we're going to highlight this a little bit more now that we're headed into the heat map. But this heat map is very good at telling us where the flows are and the strength of the flows on a relative time basis, right? So on a trading week, industrials dark green, consumer discretionary dark red, showing the strongest flows for that week and the weakest or the strongest outflows for that week. What this doesn't tell us is its relative strength over time. So I went over this last weekend, spent a little time looking at the numbers. And for example, industrials has a 0.15% inflow for the last week. And the reason I'm bringing this up is that the flows over the last couple of weeks, even month or so, have really been on the weaker end. Since the beginning of the year, the average top inflow for the trading week was at 0.4%. Since 2020, it was 0.53%, and since 2006, it was 0.87%. What is that telling me? Um, I a little bit of speculation, putting my analyst hat on, and I think most analysts understand that this market is currently overextended. Um, they don't they need to participate. It's death to not participate in a market, especially when it's going up. And the famous saying, the markets can stay irrational longer than you can stay solvent. So managers needing to be invested are throwing around their best, but seemingly throwing them around a little bit. With less conviction than they normally would. So we're seeing, these inflows on the trading week that really aren't as strong as what we've been seeing or what on average we see. So, for example, here 5 6 here, this is green, but the flows are effectively zero. I'll show you a little bit later in the rainbow charts, but you can see that the strength of these flows, even though we have a 5 6 and they are green, aren't resulting in the relative outperformance that we would see, for utilities or consumer staples in a normal environment. So, what's the actionable item here? The action item here is to just be careful with, we still believe in the SEAF model, and the strength of the model is identifying where money is flowing in, and that is what this is doing. But just understanding also that, the reason I'm doing these videos is to kind of highlight and take it a little bit step deeper into not just where the strong flows are, but how strong are the flows? Where are those flows in relation to historical flows? And the last couple of weeks, a little bit weaker, a little bit more spread out. And again, I think that has to do with managers really trying to make sure that they are they're still participating in the market, and putting feelers out without a lot of conviction into the various sectors. That's why we've also been seeing a little bit of churn on this model as of late. The other thing to kind of note, and I've mentioned this in the past, when you start to see these colors, we got a little bit of trend here in industrials and technology, but outside of that, a lot of green sitting in this avoid rank, broader avoid ranking, some red up in the neutral or even positive, positive ranking. So, we're at a little bit of a turning point. This market's trying to decide what it's going to do, but there's definitely some indecision. This is screaming indecision to me. Heading into the rainbow charts, looking at industrials, you know, very much strong, staying in the upper favored ranking, and we're seeing that in the relative outperformance. We do have a little bit of a resistance in the relative outperformance chart here. Ideally, a couple more weeks of strong flows, and we can break through that. But we're not here to project anything. We're just here to show what's going on. And as of right now, we have strong flows into industrials, resulting in some relative outperformance versus SPY. Similar both for technology. I bet technology's been in the favored ranking for a little bit longer and is seeing a little bit of churn up and down. As you can see that this up and down churn from upper favored to lower favored is causing a little bit of sideways movement in the relative outperformance chart. Still a bit a positive sloping relative outperformance, and we're heading back into this upper favored ranking. So again, we're not projecting cash flows. We are telling you where flows are coming into these sector spiders. And when we sit in this upper favored territory ranking, we end up with relative outperformance. On the flip side, when we spend a bunch of time in the avoid ranking, utilities, as we can see, attempted to kind of peak up into this neutral and then headed right back down into a void, continuing this broader trend of relative outperformance in utilities. Seeing a very similar trend in consumer staples. And this is why I mentioned earlier, technically these were positive inflows on the week, but because they were almost net zero, almost little to no effect on the relative outperformance. We've had a broad negative relative performance in consumer staples over this long time, and we have spent a significant amount of time in this avoid ranking area. Last but not least, materials is interesting at the moment. I'll back up to our chart real quick, our table real quick. See materials going from 8 to 5 to 4, and as we can see here, we have had this kind of steady growth in the SEAF ranking for materials, and that has really kind of coincided with some relative outperformance. Now, materials is not a SEAF signal yet, but if we continue this trend and can get up into this favored ranking and continue to see the inflows into materials, we do have some nice relative outperformance in materials. So for any managers or individual investors that are looking to get into materials or would like to be a little aggressive or take a little bit of a lead off, we are seeing some positive things in materials. I repeat this ad nauseum. We don't project cash. We don't project flows. So this thing could take a header next week and take a dive in the relative outperformance. But if this thing continues to trend in the direction that it has been for the last couple of weeks, we should see a little bit more money headed into favored, and continue this relative outperformance trend. Not a SEAF signal, but just a place of interest and a place to keep an eye on over the next couple of weeks. That is all I have for our video for this week, and I look forward to breaking down the SEAF model with you all next week.